If you've been told your nonprofit's Form 990 deadline is May 15th, that might be true, or it might not. Here's what most people miss. The deadline isn't a hard date. It's whatever your fiscal year is, plus 5 months and 15 days. If your fiscal year ends in June, your deadline is November 15th. If it ends in October, your deadline is March 15th. And the real penalty for missing it isn't a $25 a day fine. It's losing your €5 C3 status after 3 missed years. No appeal, no grace period, just a letter from the IRS. In the next 10 minutes, which 990 you file, what your real deadline is, how to file an extension, and what to do if you've already missed it. Let's go. There are 4 versions of Form 990. Which one you file depends almost entirely on revenue and assets. First, 990N, the e-postcard. If your gross receipts are normally $50,000 or less per year, this is you. It takes about 10 minutes online, no CPA needed, just 8 basic pieces of information about your organization. Second, 990EZ, the short form. Gross receipts between $50,000 and $200,000 and total assets under $500,000. 4 pages instead of 12. Still requires accurate bookkeeping, just less of it. Third, the standard Form 990. If your gross receipts are at or above $200,000 or your assets are at or above $500,000, this is the one. 12 pages of core form plus up to 16 schedules, depending on what your organization does. Most nonprofits in this category work with a CPA. Fourth, 990PF. This is for private foundations only, regardless of size. Different document, different reporting requirements, investment income, grants made, board compensation. If you're not a private foundation, ignore this one. Before you do anything else, figure out which version applies to you. The easiest check is looking at last year's filing, but if this is your first time, the revenue thresholds above tell you the answer. Now the deadline. This is where most nonprofits get tripped up. The IRS rule is Form 990 is due the 15th day of the 5th month after your fiscal year ends. That's it. There's no May 15th for everyone. Most nonprofits run on a calendar year. Fiscal year ends December 31st. 5th month after December is May. 15th day of May. So, yes, May 15th is the deadline for calendar year nonprofits. That's where the rumor comes from. But if your fiscal year ends June 30th, common for nonprofits aligned with academic or government grant cycles, your deadline is November 15th. If your fiscal year ends September 30th, common for government-funded organizations, your deadline is February 15th. If your fiscal year ends March 31st, your deadline is August 15th. A quick check, pull up your last Form 990. Look at box A on the very first page. It says, for the calendar year, or tax year beginning and ending. That ending date is what determines everything. 5th month after that 15th day. Lock it in your calendar. If you're not going to make your deadline, you have a tool. Form 868. The application for automatic extension of time to file an exempt organization return. This is your safety net. Most executive directors don't realize how forgiving it is. 3 things to know about Form 868. First, it's automatic. You don't need a reason. You don't need to be sick, behind on bookkeeping, or recovering from a server crash. You file it, and the extension is approved. The IRS has no discretion to deny it as long as the form is filled out correctly. Second, it gives you 6 months, a single 6-month automatic extension. So, if your original deadline was May 15th, Form 868 moves it to November 15th. If your deadline was November 15th, it moves to May 15th of the following year. That's a real cushion, like half a year to get your books straight and finish the return properly. Third, it has to be filed by your original due date, not after. Once your deadline passes, Form 8868 won't help. You can't retroactively extend a missed deadline. If you're watching this on May 14th or 15th and you know you won't make it, pause this video, file Form 8868 right now, and come back to finish watching. Now let me walk you through exactly how to file it. This part is shorter than you'd expect. Step 1. Get to IRS e-file. You can file Form 8868 electronically or on paper, but e-filing is faster and what the IRS recommends. Most nonprofits e-file through one of three routes: an authorized IRS e-file provider, a commercial tax software product, or a paid preparer. Go to irs.gov, search Form 8868, and the About page will walk you through the options. Step 2, have these 4 items ready. You need your organization's legal name, your EIN, that's your employer identification number, which is on your IRS determination letter, which Form 990 version you're extending. 990N filers don't need Form 8868 since the e-postcard is essentially instant, so this is for 990EZ, standard 990, and 990PF filers. And your tax period, the start and end dates of your fiscal year. Step 3, fill out the form. Form 8868 is 1 page. It asks for basic identifying information, the form being extended, the tax year, and your contact information. There's no narrative. You don't explain why. You just check the box, requesting the automatic 6-month extension. Step 4, submit and save the confirmation. Electronic filing gives you an immediate confirmation. Save the confirmation number and the PDF. That's your proof. One important clarification. An extension to file is not an extension to pay. The 990 itself is informational. There's no tax owed with it. So, for most nonprofits, this doesn't matter. Bottom line, if you can't file by your deadline, file Form 8868 by your deadline instead. 6 more months. No reason required, no fee, no questions asked. Now the part you actually came here for. What happens if you missed the deadline and didn't file an extension? The penalties scale with your nonprofit size, and they add up every single day the return is late, including weekends and holidays. If your gross receipts are under about $1.3 million, but that's most small nonprofits, the late penalty is $25 per day, capped at the lesser of $13,000 or 5% of your gross receipts for the year. If your gross receipts are over $1.3 million, the penalty jumps to $130 per day, capped at $65,000. Let's make that real with 3 quick scenarios. Scenario 1, a $400,000 children's tutoring nonprofit. Their bookkeeper went on maternity leave, and the deadline slipped. They file 30 days late. That's 30 times 25, $750. Painful but survivable. Scenario 2, same organization, but they didn't realize they missed it. 6 months go by before they catch it. That's 180 times 25, $4,500. Now we're talking about a real budget hit. Scenario 3, they never file at all for that year. The penalty caps at $13,000, but that's just for 1 missed year. Miss 3 in a row, and the conversation changes completely. We'll get to that in a minute. One more thing executive directors miss. If your filing is incomplete, missing a schedule, missing signatures, missing required disclosures, the IRS treats it as not filed. The penalty clock keeps running. Submitting a 990 with blanks isn't a filing, it's a partial filing, which legally is no filing at all. But the daily penalty isn't actually the scariest part. The scariest part comes next. Here's what most executive directors don't know, and it's the single most important thing in this video. If your nonprofit fails to file a Form 990, any version, including the simple 990N e-postcard, for 3 years in a row, the IRS automatically revokes your 501c3 status. No warning letter, no appeal. The revocation date is the original due date of the 3rd missed year. Once that date passes, it's done. What does losing your 501c3 actually mean for your day-to-day operations? Donations to your nonprofit are no longer tax deductible for donors. Your state sales tax exemption typically goes away. Many bank accounts and merchant processors freeze or close. Most grant funders check IRS status before dispersing. You'll be disqualified from new grants, and you may owe federal income tax on revenue you previously didn't. The IRS publishes the auto-revoked list publicly. It's searchable on the IRS tax-exempt organization search tool. Grant funders, watchdog sites like Candid and Charity Navigator, and savvy major donors all check it before they engage. Showing up on that list is a fundraising emergency. Now the recovery path. Under Revenue Procedure 2014-11, there are 4 reinstatement routes. Section 4, Streamlined Retroactive Reinstatement. For small organizations eligible to file 990EZ or 990N. Must apply within 15 months of revocation. Fastest, cheapest path. Reinstatement is retroactive to the revocation date. Section 5, Retroactive reinstatement within 15 months for any size organization, requires a reasonable cause statement for at least one of the 3 missed years. Section 6, Retroactive reinstatement after 15 months. If more than 15 months have passed, you must show reasonable cause for all 3 missed years. Section 7, Postmark date reinstatement. If you can't meet the reasonable cause bar, you apply for reinstatement effective from the date your new application is filed. Going forward only, each route requires refiling the Form 1023 application. The user fee is $600 for standard Form 1023 or $275 for Form 1023 EZ if you qualify. Most small nonprofits going through streamlined reinstatement can use 1023 EZ, that's the cheapest path, $275. The cheapest path of all, of course, is don't get revoked. The second cheapest is the streamlined window, 15 months from revocation, using 1023 EZ if you qualify. Every month past 15 makes recovery harder, slower, and more expensive. If you're in any of these situations, first-time filer, fiscal year confusion, deadline coming up fast, missed deadline, or auto revocation recovery, the path forward is usually clearer than it feels right now. Here's what to do today. 1. Find your real deadline. Pull up your last Form 990 or your IRS determination letter. Find your fiscal year ending date. Add 5 months, then 15 days. That's your real deadline. Put it on a recurring annual calendar reminder, set 90 days in advance. 2. If your deadline is within 30 days and you're not ready, file Form 8868 today. It takes 10 minutes online, no reason required, no fee. 6 months of breathing room. 3. Check your current IRS status. Go to apps.irs.gov/app/EOS. That's the IRS tax-exempt organization search. Look up your nonprofit. If you've been auto-revoked, the cheapest recovery is streamlined reinstatement using Form 1023 EZ at $275. That window closes 15 months after your revocation date, so move fast. Need help with any of this? GivingArc handles Form 990 preparation, late filings, Form 8868 extensions, and reinstatement applications for small and mid-sized nonprofits across the U.S. Link to a free 30-minute consultation is in the description below. If this video saved you time or money, subscribe. We publish walkthroughs on the operational and financial questions small nonprofits actually ask. Thanks for watching.